Hello and welcome to the Jones Lang LaSalle Hotel and Hospitality Group's overview of the milestone sale of the Four Seasons Hotel Sydney to Murray Asset Global Investments. At 340 million Australian dollars, this was the highest price ever achieved in Australia for a single hotel asset and represents the first five-star acquisition made by a Korean-based entity in Australia. I'm sitting in the stunning presidential suite of the Four Seasons Sydney with Mr. Glenn Boltwood, Fund Manager of Eureka Funds Management, representing the seller. Welcome, Glenn.
Thank you very much, Craig.
Firstly, congratulations on the sale of the hotel.
Yeah, look, we're very happy with the results.
To start off with, can you tell us why Eureka decided to sell the hotel now?
Look, we've driven a lot of change at this hotel over the past 4 years. We've more than doubled our profit in 2009 from 12 million to 26 million this year. And on the back of that, our unit holders really wanted to see us crystallise some of those strong returns in an environment where their returns from other asset classes had been somewhat mooted.
Prior to the sale, the hotel underwent extensive renovations. Can you tell us why you did this and a little bit about it?
Look, there are a number of reasons. We spent $12 million focusing on the food and beverage and upgrading that. So we converted the old restaurant into new meeting rooms. We moved the restaurant from level 3 down to level 1 to give it more presence. And then we created a new Sydney bar with street presence to George Street. The second reason for this was really that we saw the real ultimate purchaser of this was most likely to come from Asia. And in Asia, as you know, Craig, food and beverage is paramount, and we wanted to present it in the best light to attract the most interest.
The Four Seasons Hotel was the last major Sydney hotel which was 5-star to be owned by a local Australian group. Why do you think that offshore parties love CBD hotels so much, and why aren't they as strongly contested by local parties?
In terms of the Asian interest in hotels, I think it's twofold. Firstly, the Asians are used to running businesses, and most of their money has historically been built on businesses. So they understand hotels a lot better than the local market. In addition to that, hotels in Asia are generally sold at much tighter yields. So going to Australia, secure economy, much higher income yields, it's a great hedge against low interest rates. In terms of the local market, this is something we've been trying to change over the past 4 years. There's very few local superannuation funds invested in hotels, and that's largely on the back of bad experiences back in the early 2000s with some listed hotel REITs. Since that time, there's been a number of preconceptions about hotel investments and their volatility because they believe it has business risk. But what they're actually starting to understand is that the volatility of hotel returns is not actually dissimilar to those of office, and therefore we think that over time it'll take one superannuation fund to move into this space in a big way, and I think you'll see that the others will follow.
Lastly, how have your returns on the Four Seasons transaction compared to the commercial assets in your portfolio? And most importantly, are your investors happy with the overall performance of the hotel?
Look, our investors are very happy with the performance of the hotel. To give you some background, Eureka Core Property Fund 3 invests across office, retail and hotels, so it's quite a breadth of exposure across all property asset classes. This hotel and its performance is by far and away the best performing asset in our fund, and it's unlikely to be surpassed by any of the commercial assets.
Thank you, Glenn, for your time today.
Likewise, Craig. Appreciate it. Thank you.
Thanks for joining us. If you'd like to discuss any aspect of the Australian hotel market, please do not hesitate to contact any member of our team or visit our website at jll.com/hospitality.